Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Logify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.
Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information you need to start your week. Join us on Good Morning Hospitality every Tuesday, wherever you get your podcasts. Hi, everyone. I'm delighted today to be joined by Dale Smith, founder and CEO of Host and Stay. Dale, how are you, my friend?
I'm good, Leo. Good to see you. Thanks for having me on.
You too. And it looks to me like you've caught the sun. You've been away. Somewhere nice.
No, just a little bit of weekend running, Leo, in the sunshine last couple of weeks. So, yeah, it's been nice, mate. It's been nice.
I'm feeling it. Who needs to travel to Spain when the UK is so nice at the moment, right?
Yeah, exactly. Yeah, it looks like the week ahead's looking good as well. So, yeah, no, can't complain at the moment.
Yeah, I was in Austin. Sorry, I keep saying that. I was in Denver 2 weeks ago. Okay. And I was back home. It was like 25 degrees and everyone was sat on the beach. I was like, what am I doing?
Yeah.
I've gone the wrong way.
Yeah, no, we've been relatively lucky at the moment. So long may it continue.
Well, look, we've done that very British thing about talking of the weather, which is how we have to start every single conversation in the UK. Yeah, the weather's been good. We're going to talk about the UK market to see if the economic outlook is as rosy as the weather is appearing to be. So, Dale, thanks for joining us today. Dale, for people who don't know, everyone should. You've been on before, but just tell us a little bit about your business and why you're the right person to talk about the UK market today.
Yeah, absolutely. So, as you said, I'm CEO and founder of Host and Stay. So we're a UK-based property manager, managed around 1,500 short-term rentals right across the UK now. So predominantly northeast, North Yorkshire is where bulk of our portfolios, but portfolios now in Norfolk, Brighton, Worcestershire area as well. So covering the UK. And we have a lot of coastal and rural stock, starting to play a little bit in the urban market, where 90% of our guests are tourist travelers, holiday makers. So not massively in the B2B market. We do a lot of short stay rather than longer corporate stay stuff. And yeah, founded in 2018, so we've grown pretty quickly. Did a lot of acquisition in 2024, and yeah, it's an interesting year so far this year. Which hopefully we'll get on and chat about, because the market's definitely shifted. And I think for us, 2025 is all about just getting brilliant at the basics. It's a real, I think as the market as a whole, it's a realization year for everyone in terms of looking and saying, right, how do we solidify this business model? How do we make sure we're nice and neat and tidy? Because for me, I think it's going to be sort of 26, 2027 before we really start to see the wheels turn again and really focus back on growth again.
Yeah, very interesting. Good segue into what we're talking about, and good to know you mentioned Brighton as one of your destinations. So you know as well as I do, it's paradise down here. So nice one. I didn't think we'd start here, but as you've started there, let's talk about it. 2021, we had a high water mark, I think, in the post-COVID boom. 2021, 2022, and it does feel like globally we've stuttered slightly since then. What do you think? Will that remain a high water mark for the industry, high water line, or do you think we're just stuttering and we'll kick on again?
I think we'll kick on again. I think we're a couple of years away from being able to kick on again. If I look at where we were post-COVID, it was high, occupancy was high, rates were high. Bit by bit, we've seen ADR come back over. Ultimately, we had to see that because more and more stock has been ploughed into the market. And I think, if you look at early 2025, one of the really surprising things for me this year is that we've seen more stock in the marketplace. I'd convinced myself that we would start to see overall stock in the market tick back over month on month, and we haven't quite seen that yet, which I still think we will see. I think with, regulation still, coming at us pretty quickly, I do think we will see stock start to dwindle over the second half of this year and into next. And I think we do need that, Leo, as well, to be honest with you. We need that. We need less stock in the market so we can see ADRs and margins start to rise again. I think ultimately like that post-COVID boom for us really lasted like just short of 12 months. We did a year's worth of bookings in 6 months essentially. And after that, it's been a much more normal picture. I think the issue we've had as an industry, and certainly we've seen in terms of owner expectations, is that the owners that brought properties into the market during COVID period immediately after, their expectations are up here. And it's still taken time for those expectations to lower. But also for some of those owners as well, they bought up here, they're paying interest rates that are up here, they've got cost bases that are up here, and therefore they need to maintain those rates that we were seeing. And I think some of the model has just become unviable for people that jumped on the bus right after COVID and actually have ended up with properties that they're not sustainable to make the level of profit they actually need to get to. And I think that's one of the difficulties we're dealing with as property managers, is just those owners that join portfolios within 18 months of the COVID period finishing, ultimately are in positions that aren't sustainable, quite frankly, unless they were buying for cash. Perhaps a different story, but certainly those that have come on using mortgage funding, it's really difficult to get to where they need to be to make it sustainable. So I do think we'll see more of those owners drop out the market over the coming months and years, really.
Yeah, it's interesting. I'm glad you've talked about this, because I feel like it's the unspoken thing at the moment, isn't it? It's like, what type of supply is on there?
Yeah.
The very kind of traditional short-term rental holiday cottage supply that's been on for years. There probably isn't a big mortgage on that, right?
No.
It's an owner that's like handed over the keys and saying, generate some income for me.
Yeah.
We talk about, and again, I remember I cut my teeth in the London market for one fine stay, and we were always talking about supply and demand matching. And London, we hear about it being, it's because of the regulation, I suppose it's not saturated, but you hear about the saturation in big urban areas. Would you say that's even the case in rural and coastal areas at the moment?
I think it is in some. Let's take, Whitby is one of our core markets. We've got circa 300 properties in Whitby, as do Sykes, as do Travel Chapter. So I think the Whitby and immediate Whitby market is a couple of thousand properties, which is huge, really, I think, for what is a relatively small North Yorkshire coastal town. And we've seen stock continue to increase there. Demand continues to increase, but also the stock quality versus what it was when we came into the market has increased drastically as well. So if I take us back to like 2018, 2019, when we first got started with Host and Stay, our primary philosophy was, can we take what is really average stock, design it, refurbish it in a way that takes it to a 4 or 5 star property, and actually you can sweep up loads of demand because your stock is just out and out better than everyone else. Like, we would always say, look, we're top 10% of the market in terms of product quality, whereas now our product quality is probably, your top 50%. It's 50% of the market because the bar's now up here, and 5, 6, 7 years ago the bar was down here. And that, I think, also makes it difficult. It's good for the guest because their choice of high quality properties has increased significantly over recent years. But I think for us as property managers and for property owners in general, it's just a hyper competitive market that, if you're buying a property and you're going to put it on as a holiday let now, you can't make that mediocre anymore. The design's got to be right, the furnishing's got to be right, because if you don't, like, you're literally not getting any bookings, or you're selling it out so cheap that you're just not going to make any margin. So I think we've seen that, and I think it's positive because it's this professionalization of the industry piece and elevating the quality from an industry point of view, but it's made it way more competitive, and it's much more difficult to get an edge now than what it was 5, 6, 7 years ago.
And I would say that's definitely right. I stayed at one of your places a few years ago. Do you remember? Was it a photographer's apartment? Very
yeah,
cool.
okay, yeah. That's
very,
right.
Very cool. And I'm obviously wildly colorblind, so I couldn't tell what the color any wall was in that entire property. But you guys were kind of, I think it's fair to say you were ahead of the curve on that quality design side of things. Interesting to hear that it's up. That was going to be one of my questions, I think. Like, what do guests expect now out of a holiday rental, do you think, in the UK market?
I think people do expect fantastic interior design, definitely. Like, people expect it to be high end. Before, I would have said guests would turn up to a country cottage and, the kind of the faded leather sofas and, the rugs that have been there for a few years, etc. Like, the kind of, let's call it the homely look and feel is kind of now done. Ultimately, those probably what you call 2 and 3 star properties, guest expectation is that it's a modern 4 or 5 star interior design led property. Ultimately, like that's the expectation. I think we always have the debate, when you look at maintenance on properties, arguably you could be repainting the property once every single quarter to keep it right, because as we know, guests take the cases upstairs and there's black marks up the walls and they don't take the shoes off at the front door and tread mud up the carpets. It's a real fine balance of how do you keep a property at the top end of the scale to meet guest expectations, but then try and balance that with what the cost is to maintain it and also profitability. Something we do for our properties is every property on our portfolio gets a full survey every year by our property surveyor, and that's effectively like we do a red, amber, green kind of check on the property that you would do. If your vehicle went into the garage to get an MOT or a service, to send you that red, amber, green report. Here's the things that are all good, but here's the things you need that are advisory, and here's the things you absolutely must do now. So we're trying to do that with owners to say, look, here's everything that's good with the property. Here's some things in the next few months we're going to think need addressing, but here's the red things that we absolutely need to address today if we're going to keep the property at the right quality level, the right review level, so it can continue to perform. We're a bit different because we do maintenance in-house, so we've got a team that we will provide a quote for that, and we can go and facilitate and deliver that work in-house, which is, our USP as a business. But it's a real tough balance, Leo, in terms of saying to owners, look, you need to spend 10 grand on redecoration to keep the property right, to meet guest expectations and keep the reviews up and to be able to keep performing. But then also you're balancing that with, higher costs from an owner point of view. Cleaning costs are more expensive now because of labor cost increases. We all know utilities have been much more expensive over the last couple of years. Interest rates have increased as well. So it's a really fine margin line for owners on being able to balance, continue to deliver high quality product, which is absolutely the expectation of guests anymore. There's no leeway with guests. There's no getting around things. Their expectations are high and they tell you about it if they're not met. But then trying to balance that with margin from an owner point of view to make it viable for them. So, we're in a difficult market, I think, from that point of view at the moment, essentially wrapped up in high guest expectations and low margin for owners ultimately. And it's a difficult balance to get.
Yeah, and it takes you back to where you started, which is that might be a driving factor in some people choosing to sell up or move to long-term rental, right? Mm-hmm. It's the idea that the maintenance cost is higher when you look at the returns, especially if you got in around that 2021 point. Yeah. Now, the market ebbs and flows, trends and fashions come and go in terms of what people like to do on their holidays. Because you work across the UK in a variety of markets, we've mentioned rural, coastal, you've got urban inventory as well. What's your feeling looking at all those different categories? Which do you think is performing best and looks healthiest at the moment?
Well, do you know our top performing location at the moment, Leo, is Brighton.
There you go.
Well, Brighton has performed really strongly for us from about February onwards. It's an interesting one because the Brighton location, the Brighton portfolio was an acquisition for us in end of July last year. So, it's approaching the 1 year mark. And it probably took us, it's taken us 6 to 7 months to get that portfolio performing. And putting our revenue management techniques into it, our marketing techniques into it, coaching owners and taking them on a journey. I think that's the one really interesting thing always in our industry is that as property managers, we can't just turn down price and offer incentives and discounts to guests without taking the owner on that journey. It's not our stock to just make our own decisions on. Yes, we'll have parameters we can work in, but that's taken us 6 months to take those owners with us on a journey to get the right length of stay and get the right ADRs into the portfolio to really drive the performance. So Brighton's a really good news story for us. And again, I'm looking at this month's numbers, first couple of weeks of May, performing really strongly. Liverpool's always a good performer for us, was last year, continues to be this year, mainly buoyed by weekends. Like Liverpool ADRs are crazy. Weekend ADRs can be 4, 5, 6 times what they are during the week. But midweek performance in Liverpool is always a struggle. It's not a big player in the corporate market, still heavily tourism, so it's weekend driven. And then for us, just coastal locations in core areas. So Whitby I touched on, Northumberland coastline, continues to perform well from an occupancy perspective. That said, again, you've got somewhat winners and losers in that, because expectations are high. Properties that aren't achieving the right review scores and the right standards, you're seeing those properties slip behind on performance much faster than what we would have done in the past. So yeah, I think for us, Brighton and Liverpool, from sort of what we would class as urban market, as you know, we don't play in places like London, or we've got a little bit in Manchester, but kind of true kind of city centre urban stuff is not a market we play in. It's more the tourist focused. But again, coastal is always a good performer for us.
I feel that there is a shift in terms of a mindset shift. People are much more used to the concept of taking on a short-term rental for the weekend and going away with friends.
Yeah.
And I feel like the US is a couple of years ahead of us, or maybe even 10 years ahead of us. And we're getting there in the UK. And it seems sort of baffling to us to think back 10, 15 years and an area like Whitby wouldn't be that well discovered. And now it's firmly on the map. By the way, any American or European listeners that have never been to Whitby Bay, you have to go. It's beautiful. Yeah. And so I do feel there is part of that cultural shift in how people behave. So I think it's really interesting to see that even with the growth in supply, the quality inventory is still getting booked.
Yeah.
As a consequence of that, does that mean that ADR relative to last year is quite stable? Like, as in, as long as you've got the right amenities and the right quality, you can charge for it.
Yeah, definitely. We're not seeing too much movement in ADR. Certainly in terms of checked out ADR. So we've got two that we'll track. Obviously, what's the ADR on bookings that we're creating, and obviously that's impacted quite a lot by lead time. So we'll see ebb and flow. May ADR at the moment is a bit below where we'd want to be trending, but we've got a lot of last minute bookings going into May that are then going to be at lower ADR rates. Whereas our checked out ADR is trending last year pretty closely, Leo. We're probably down ever so slightly. We're in a bit of a different situation this year because we acquired businesses in 5 different locations. So we've not got a true like for like anymore in terms of what our 2024 data was versus what our 2025 is. But ADR is not something we've seen too much of an impact on. And actually from an occupancy point of view, relative to where we were last year, we've actually had a strong start to the year. We've typically trended ahead about 3 or 4% in terms of occupancy into future months. So if you take May as an example, we went into May 4% ahead on occupancy versus what we were last year. And we're currently trending 3% ahead on for July and 3% ahead for August than where we were at our as-at positions last year. So that's an interesting one for us, because hopefully that means we're increasing lead time on bookings, so we can therefore sell at a slightly higher ADR, so less last-minute demand. Now, I know in the market we're seeing more last-minute demand, but from a host and stay point of view, last-minute demand's always been an area we've excelled in. So I think we're coming from one end of the spectrum where the market's coming the other way. Because if you take our length of stay at the moment, we're averaging about 3.5 nights. Now, host and stay 4 years ago, we'd have been like 2.9 nights. So we've come from super short length of stay. Our length of stay, bit by bit, as we've expanded the portfolio into different areas and locations, has increased slightly, but we're still well below what you would say the market average is on length of stay. But we're coming towards the market, and the market's coming towards us in terms of lead time and length of stay, I suppose, just because of our go-to-market strategy is a little bit different, I think, to what the traditional route would be.
It's very interesting. So globally, people are saying lead times are shortening. You're seeing it maybe pushing out slightly. Could that also be to do with the fact that you are more in the rural coastal tourist market versus the urban, perhaps?
Completely. I think it's just mix. And again, there's so much that plays into that, percentage of larger properties on the portfolio, higher the percentage of larger properties, that will increase lead time. Again, we're roughly 60% 1 and 2 bedroom stock. So therefore you would expect our lead time to be shorter and our length of stay to be shorter, which it is. So I think it just completely depends on your portfolio mix is going to be ultimately the driver of length of stay and lead time. If you're only doing 4 or 5 bed properties, then you're going to have a super long length of stay, super super long lead time just by the nature of how it behaves, really. So that's something we're seeing it shift, but I think we're just coming at it from a different, our starting point versus market has always been super short, super late, and we're just seeing that normalize, really.
We've had the latest earnings calls from Booking.com and Airbnb. So the Booking.com one caught my eye. They're reporting 12% growth in the alternative accommodation section of their business, which is outpacing hotel room growth, which is very, very interesting. So it now accounts for, I think, 37% of their total inventory, total revenue, versus 36% 2024. Are you seeing this growth in Booking.com?
Our Booking.com contribution has, up until this month, actually had gone back over year on year. So we were seeing a higher contribution from Airbnb. We were up to 33% Airbnb contribution for 2025. Booking.com, however, is still high 40s. Like, Booking.com is a better performer for us than Airbnb portfolio-wide. I think we've predominantly seen the shift in the acquisitions that we've made. So Brighton, as an example, was a high-performing portfolio from an Airbnb point of view, did very little on Booking.com. So naturally, as that portfolio has come into our existing portfolio, we've seen the dynamic shift in terms of Airbnb contribution. Again, it depends on portfolio mix on stock, Leo, as well. I would always say that, if it's a 1-2 bedroom, more commodity stock, Booking.com will perform better than Airbnb. If it's a higher end 4-5 bed property, coastal, rural, I would expect Airbnb to perform better than Booking.com. So we're not seeing too much shift on that. I think it makes sense. Like, for me, the growth that Booking.com seen, seems to be coming to fruition. You look at the gains they're making on Airbnb in the US market, they've always been strong from a European point of view. And they come at, it's an interesting one because it feels like Booking.com and Airbnb are coming at it from two very different angles. Airbnb are trying to control much more of the journey, whether that be, delisting properties that are not hitting the right guest review metrics, that are getting guest issues and therefore being delisted, to obviously what they're trying to do again with co-hosts. Airbnb are trying, it feels like they want to create this guest brand where they're controlling the guest journey. And for me, that's a certain level of play, but that's a play that's going to really hinder volume in the long run. But maybe that's what they're looking to do. Whereas Booking.com feels very much, here's all the stock. You've got independent reviews, but it's up to you, Mr. Traveller. Pick whatever property you want based on the information we're giving you. We're not bothered which one you book. Whereas Airbnb want to push you, it feels like they want to push users into certain stock categories and certain types of stock. So I think we're seeing those two OTAs come at the market very differently. And it feels more like Booking.com's approach of, we're not bothered which property you book, Mr. User. We'll give you all the facts and figures. You make your own choice, is the route that's actually winning at the moment. That's what it feels like from our side. Whether it's right, whether it's wrong, I don't know. But ultimately, it feels like Booking.com don't want to control on-ground ops. Feels like Airbnb do. But if they want to play in that market, then it's going to be interesting, because ultimately that's where the property managers come in, right? So, and that's the job we're here to do, is to try and control that stock on the ground and provide those services. But Airbnb makes that much tougher than what Booking.com does, would be my current take.
I think that's really good to get your opinion on. Actually, I agree with it. I've not heard it quite framed that way, and I like that. I do think the beauty of the magic of Booking.com at the moment, maybe why they're relatively performing better, is that you can, in a short-term rental supply constrained environment where there's heavy regulation, there might only be 10 short-term rentals. There's also 50 hotels, and then Booking.com shows you 60 options. Airbnb's only show you 10. Yeah. Quickly, I didn't think we were going to go there, but let's, before we finish. Do you feel that, therefore, you've mentioned Airbnb sort of going deeper on the guest thing and probably potentially makes their business less scalable. Do you feel, as a large operator, do you feel that Airbnb is incentivizing you to work with them, or are they potentially making it more challenging to work with them?
They probably make it more. It depends. I think they could be more proactive. I totally understand where Airbnb want to go in terms of like the quality piece. and I understand on their metrics in terms of if they get, if a guest has a negative review, they're not just less likely to book that property, they're less likely to book with Airbnb in general. So I get the whole quality piece and retention of a guest. I think what Airbnb need to look at is, right, how do they work with the professional host to make sure that can be delivered? And how do you get ahead of the curve on it? So if we've got a property that isn't performing, which we have, and we've had properties where Airbnb will turn them off because the review hasn't been, bad negative reviews, but it's being able to have that conversation with Airbnb or get ahead of it so we can go, look, here's a list of properties aren't performing. What do we need to do working together to fix some of those things? And actually, what is the incentive around it? Because it's back to, from our point of view, like we've already talked about, to fix that property, we need to go to the owner and say, look, Mr. Owner, you need to invest 10, 15, 20 grand in that property if you want to list it back on Airbnb again. Well, is that actually viable for that owner to do? Because ultimately Airbnb's made the decision that they no longer want to see that property on the platform until it's fixed. But that's something that's out of our hands to a certain degree, and we need to work with the owner to get it back up to standard, which takes investment. So it's a tough one, Lee. Ultimately, I think with where Airbnb are headed from a control of quality point of view, if they want to play that game, it feels almost like they need to start and acquire property managers to actually play in that game. Because trying to do it through means they're doing it at the moment. My gut feel is I think it's going to do them more harm than good in the long run, is my take anyway.
Yeah, it's interesting. I'm putting my One Fine Stay hat on, saying that's maybe where we fell short, right? We were too heavily involved in the service side of it, which hampered scalability. So yeah, it's interesting to see those two ideas come together. Dale, looking ahead, what excites you about the UK short-term rental market in the next 6 to 12 months?
I think the professionalization piece, Leo, we've all been talking about regulation coming now for a couple of years. I think seeing what happens with the registration piece first and foremost. I think for all of the professional property managers in the market, I think we need to see the barrier of entry raised to level the playing field a little bit. So, I'm looking forward to that happening. I think as a business, we're in a good position for that in terms of how we manage maintenance, compliance, housekeeping in house. So I think it gives us an advantage. So that does excite me from that point of view. And I think ultimately I'm excited that the sector is going to go through probably a period of consolidation where we know we've been growing quickly as a sector, literally, year over year. I think we're going to see that bit of consolidation, which I think is good because it enables us to level up from a quality point of view. We're going to go through a bit of pain of stock dropping out the market, which is going to be both positive and negative because we need to keep owners happy, and losing stock's never a good thing. But I think as an industry as a whole, I think stock levels coming back over will enable us to increase ADR and occupancy, which will in turn will increase margin, which we need. Like, we need more margin. The business is getting too tight, both for property managers and for owners from a margin point of view. And yeah, I think there'll be opportunities, Leo, that come up over the next couple of years because, I think unfortunately we'll see some smaller property managers and kind of individual operators probably come out of the market or provide opportunity for further acquisition for us over the next couple of years as well.
Very interesting. And I agree. And what I think gives me cause for optimism is the things you've talked about. Some of the things I think as well are reason to assume that we can raise the quality bar. Yeah. And that's what's going to bring more guests away from just their usual hotel booking patterns and into the short-term rental booking patterns, is knowing that when they went to a property, they had an amazing time.
Yeah, absolutely. So no, it's going to be an interesting months and couple of years ahead, I think.
Dale, thanks, buddy. Really nice for you to pop in and give us that feedback from the ground in the UK. Cheers, mate. No, thank you. Thanks for having me, Leo. Good to chat to you, mate. You too. And to all you guys at home, if you've enjoyed today's show, please hit like, share, subscribe, and all the usual social places, or leave us a comment on Spotify, Apple Podcasts, wherever you listen to your podcast. Until next time, thank you very much.
Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Logify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.